Happy day all, I am Dr. Rabika, Associate Professor and Head PG Program in Commerce, M.O.P. College for Women. Today's presentation is all about the exempted incomes under Section 10 of the Income Tax Act. The purpose behind this presentation is to make you thorough with a concept which is frequently asked in many examinations, and that is the exempted incomes under Section 10 of Income Tax Act. Definitely you can expect in your examination almost in any of the sections it could be asked. And there are more than around 70 to 80 items we have, and due to paucity of time and time constraint, I am just limited only to some few items which is going to be covered in this presentation. And here how the exempted incomes that has been classified, before we will go into what are exempted income is the income which do not form part of the total income, that is not taxable under Section 10 of the Income Tax Act, and the subsection may vary, but all the items are qualified for exemption under Section 10 provided it satisfies or fulfills the conditions that has been given under the respective sections. Before we get into the presentation, this exemptions have been given to individuals and certain exemptions have been given to the institutions, and the presentation covers few items that is qualified for exemption in the hands of an individual as well as in the hands of an institution. And to start with, the first this is a list of items which is going to be covered in this presentation. To begin with the first item qualified for exemption, Section 10 subsection 1, agricultural income. Actually agriculture sector contributes more towards the GDP of our country, and it is the backbone of our Indian economy, and this is the first income that is fully exempted and provided to satisfying the condition that there should be some rent or revenue derived from land situated in India and used for agricultural purposes. So this one point itself covers the three conditions. Actually there should be some rent or revenue, there should be an income first of all, and that should be from a land which is situated in India. So the land should be located in India and it must be used only for agricultural purposes, and agricultural purposes is actually the purpose of agriculture like includes cultivation, farming, and finally harvesting, the processing, the operations, which is classified into two: the basic operation and subsequent operation. The basic operation which involves the manpower, that is what the basic operation, and subsequent operations will be the removing the undesirable growth, the irrigation and all that, and finally the harvesting. So these operations should be carried out by the assessee on the agricultural land. Provided to satisfying this condition, this income is fully exempt from tax. That is our first item under Section 10 of Income Tax Act. Now the next one is share of income from your firm in the hands of a partner. Section 10 2A, actually a partner is the share of income which a partner receives from a firm is exempted in the hands of partner. That actually every exemption there is some logic behind that to provide the exemption. A firm is a separate taxable entity and firm pay tax on its income. That income only is divided among the partners of the firm. So again the same income which is shared among the partners, it is not taxable in the hands of the partner, and actually the presentation does not cover this item. The same principle is applicable even for a co-partner in a Hindu undivided family. Actually HUF is a separate taxable entity, and the share of income of co-partner from a joint Hindu family is exempted in the hands of the member, as HUF already is as a taxable entity and pay tax on its income. The same principle applicable even for in case of a partnership firm, as firm is a separate taxable entity, the income that is shared among the partner is exempted in their hands, but it does not includes any remuneration that has been paid to a working partner or any interest that has been paid to a partner for any capital contribution by the partner. These incomes are taxable in the hands of your partner. Only the share of profit is exempted in the hands of the partner. So we have covered two items, and we have also included one more item, that is about a member in the HUF. Okay. Now move on to the next one, Section 10 subsection 10 BC. Before we get into that, actually this section actually emerged because of a disaster, a major disaster that has happened, which is Bhopal gas leak disaster, and still the survivors, the victims of this disaster are receiving compensation, and compensation received by those victims are exempted under the Income Tax Act. So, that results in this provision, any compensation received in case of a disaster, it is fully exempted in the hands of the victim, and there is no limit with regard to this exemption. Okay. And this exemption is actually for the compensation that has been provided only by the government, either the central government or state government or the local authority. Next comes payment received from Sukanya Samriddhi account. Actually, Sukanya Samriddhi, we call it as Selva Magal Semipu Thittam, that is Sukanya Samriddhi Yojana, where this is only for the welfare of a girl child. This scheme was introduced by the government. Okay. And here we follow this triple exemption, which is triple E, investment, interest and maturity. All are tax free in the hands of a assessee who deposits an amount at the time of investment, and any interest that is received on account of that scheme, and next on maturity whatever amount is received, this is fully exempted. And actually we are into tax. We are just discussing about the income that are exempt from tax, not about the investment and the mode of investment, and that is not necessary under the taxation part. Okay. The income taxable or not taxable, and what is the limit of exemption, that is what covered in the presentation, not about the types of investment, the mode of investment, the processing is not covered in the presentation. And one more thing is, this is when it comes to an exemption, actually I can just advise the students that to choose only the income that are fully exempt from tax rather than going for partly exempted tax, because the partial exemption where you have to remember the limit of exemption, and sometimes it becomes difficult to recall that limit and all that in the examination hall. Better you choose a fully exempted income. So, on that basis this presentation covered only the income that is fully exempt from tax. Okay. Now, coming to this Sukanya Samriddhi Yojana, I already said triple exemption, investment, interest and the maturity amount, and this also eligible for benefit under section 80C up to a maximum limit of 1,50,000, and actually 80C covers many investment as well as the payments also made by the assessee, and one of the investment is 80C, and total limit for 80C is 1,50,000. Now comes scholarship, section 10 subsection 16, and actually we are discussing the presentation, the exempted income presentation, no particular order. I have chosen the item randomly which covers only the income that is fully exempt from tax under section 10, which might help you for the exams. Okay. Now coming to scholarship. Scholarship is granted to the students to meet the cost of education. Cost of education includes the tuition fees, or even it covers the fees for the textbooks, notebooks and all that. Okay. So, the scholarship granted to meet the cost of education is fully exempt from tax, and when it comes to this scholarship, even not necessary that you have to spend the full amount of scholarship, you could also save a part of it, but still you can claim the full exemption. It is not only with regardless to the actual expenditure incurred, you can claim full exemption for the scholarship. And it may be given by the government, university and any board or any trust. Okay. And then there is no monetary ceiling when it comes to scholarship. Next comes section 10 subsection 17, allowance that is given to MP, MLA or MLC. Know about MP, member of parliament, member of legislative assembly and member of legislative council, and daily allowance, constituency allowance. Okay. And these allowances is only meant for the benefit of the constituency, for example, okay, from where the person that MP or MLA has been chosen. Okay. So, he spent the allowance only for the welfare of the people in his constituency. Okay. So, that basis they can claim the full exemption for those allowances, but still it does not include any salary paid to them, because salary will be taxable under income from other sources, not even under salary income, because they are not the employees of government, no employer-employee relationship between the representatives, they are all the public representatives, no employer-employee relationship between government and this. So, they are taxable for salary income under income from other sources. Here only the allowances are exempted. It could be a daily allowance, constituency allowance, okay, and so that is covered under section 10 subsection 17. So, under section 10 subsection 18, the pension received by the winners of the gallantry awards. So, gallantry awards, the gallantry actually refers to the courage or the bravery. Okay. So, here the awarded to the armed forces okay, any individual who receives pension, okay, and that person has the recipient of this gallantry awards, which are Paramveer Chakra or Mahavir Chakra or Veer Chakra, eligible for full exemption under this section, and any pension that is received by the family member is also eligible for exemption, and family members of the winners of the gallantry awards can claim full exemption under section 10 subsection 18. Next, income of a local authorities. You know, local authorities, the municipality, panchayat, corporation, and they do also have the income. They do have income. They have properties which could have been rented out. They have shops. Okay, they have land and all that. Okay, and those incomes are only used only for the welfare of the general public. It is not to be divided as a profit among the members. Okay, so on that criteria, any income of the local authorities are fully exempted from tax. Even the local authorities can have house proper income from properties, capital gain, any other sources, even the trade or any business that has been, but business income is not exempted. Actually, they can't involve in commercial activity. Local authorities cannot involve in commercial activities, only for the welfare of the public. Okay. Now section 1023A, this is for an institution that is professional institutions, and professional institutions are those institutions that has been established for the development of that particular profession. We have Chartered Accountant Institute, Cost and Management Accounting Institute, okay, and we also have the Company Secretaries Institute, ICSI, and apart from that there are many institutions, professional institutions which is in the field of engineering, law, medical, which is established only for the growth and development of that particular profession, and any income that accrues these professional institutions is fully exempt from tax, provided to the condition that these institutions should use the income only for the development of that particular profession, and it is not to be shared as profit among the members. With that condition, they can claim exemption under this section. Next is exemption of income received by the under regimental fund. Actually, regimental fund is again the fund that has been established for the welfare of the member of the armed forces. Okay. So here any regimental fund or non-public fund which is established by the armed forces of India for the welfare of the past and the present members. Okay. It is fully exempt from tax. Next, 23BB, and girls, only the subsection is differing, and all the sections are set under 10 only. Okay. Now this is the income that accrues state level Khadi and Village Industries Board. Okay. Any income from an authority, whether known as Khadi and Village Industries Board or by any other name established in the state or provincial act, is fully exempt from tax. The board will be established only by the state or the central government. Okay. Then any income that accrues to a European Economic Community. This is 23BB. Any income that accrues to European Economic Community, which could be in the form of an interest, dividend, capital gain, okay, are fully exempted from tax, because EEC does not have to pay income tax on any money earned received in India, because it is a non-taxable entity. Okay. Then income of an employee's state insurance fund. Actually, ESI, which is the fund that has been handled by the Employees State Insurance Corporation, a statutory body, and it should be accordance with the Employees ESI Act, and income of such fund is fully exempted from tax. Then income of a corporation set up for promotion of the interest of the minority communities. Okay. So this is section 10 subsection 26B, promotion of the interest of the minority communities, that includes the income of a scheduled caste, scheduled tribes and backward class communities. Okay. And there are minority development corporations are there, and income accrues to these corporations or any other bodies that has been set up only for the development of these minority communities. Income accrues to those bodies are fully exempted from tax, provided they use it only for the welfare activities of the mentioned minorities in the act. Okay. And the body should be fully financed by the government. To continue with, we have the last item. Actually, as I mentioned, I am not going to cover all the items that is under section 10 of the Income Tax Act. Okay. So the randomly chosen items, this is the last one, section 10 subsection 32, the income of a minor child. If a child earns income in its own capacity, okay, by deploying some manpower or labor like that, it will be taxable in the hands of the child itself. Otherwise, other than that, if any income that is earned by the minor child, it is taxable in the hands of the parents and it will be included in the income of the parents, either father or mother, whose income is greater, and with whose income the minor child income is included, they can claim an exemption of 1,500. So these are the incomes that are exempted from tax. I think you will have an idea about the fully exempted incomes under section 10 of Income Tax Act, which will be helpful for your examination also. So thank you.